Welcome. I'm Dr. Mari Muthu. Our objective is to parse complex systems into clear mechanisms. Today, we map the regulatory architecture of the Indian capital markets. India operates one of the most rapidly expanding financial ecosystems on the globe. Scaling a market at this velocity introduces immense structural risk. To understand how the system manages this risk, we must examine the specific institutions enforcing stability. This diagram illustrates the regulatory hierarchy. We deconstruct this from the ground up, starting with market infrastructure institutions at the base, moving up to the Securities and Exchange Board of India, examining the macro influence of the Reserve Bank of India, and finally, it highlights the Securities Appellate Tribunal at the apex. We will analyze how the Securities and Exchange Board concentrates three distinct authorities into a single entity, and how the central bank manipulates macroeconomic levers to dictate the market environment. Finally, we will examine the proposed Securities Markets Code of 2025, a new legal framework designed to consolidate decades of fragmented statutes into a single, modernized code. What becomes clear is that market integrity in India does not rely on a solitary watchdog. It depends on a highly integrated, multi-tiered ecosystem, where each layer corrects the blind spots of the others. The first line of defense is not a government agency. Regulation initiates at the transaction level within the market infrastructure institutions themselves, specifically stock exchanges like the National Stock Exchange and the Bombay Stock Exchange. These entities operate as self-regulatory organizations. Processing millions of trades daily, they possess the real-time data to enforce compliance far faster than external auditors. This diagram maps their regulatory duties. First, listing compliance, monitoring so companies publish financials, governance, and material developments on schedule. Second, member supervision, auditing stockbrokers, verifying net worth, securing client funds. Third, market surveillance, scanning for price aberrations indicating insider trading or manipulation. Executing these three functions, self-regulatory organizations act as the automated immune system of the capital markets. They identify and isolate the vast majority of operational anomalies before the apex regulators are ever forced to intervene. When systemic issues breach that first line of defense, authority falls to the Securities and Exchange Board of India. Established as an autonomous statutory body in 1992, SEBI oversees the conduct of the entire market. This diagram illustrates SEBI's functional trinity: quasi-legislative, drafting regulations, including insider trading rules and disclosure norms; quasi-executive, enforcing rules, auditing intermediaries, seizing documents, and managing the scores grievance platform; quasi-judicial, conducting hearings and passing binding judgments to suspend licenses, impose penalties, or bar individuals. Consolidating legislative, executive, and judicial functions eliminates the friction of coordinating across multiple government agencies. It enables SEBI to identify a loophole, write a rule to close it, investigate the violators, and issue the penalty, all under one roof. SEBI tightly controls how market participants behave, but it does not control the economic conditions they operate in. That macro-prudential environment is dictated by the Reserve Bank of India. Visualize the RBI's monetary policy. Raising the repo rate increases borrowing costs, compressing margins and depressing stock performance. Lowering rates injects liquidity, making capital cheaper and driving market activity upward. While SEBI oversees equity, the RBI manages government securities and foreign investment limits, requiring precise synchronization. Without the RBI managing inflation and injecting liquidity, SEBI's oversight is irrelevant. You cannot maintain a stable stock market inside a destabilized macroeconomy. Giving a single agency the power to write the rules, investigate the crimes, and issue the punishments creates an obvious structural risk. SEBI requires a dedicated judicial check to prevent the abuse of its authority. That mechanism is the Securities Appellate Tribunal. Operating independently from Mumbai, the SAT is a specialized quasi-judicial entity vested with the exact powers of a civil court. This flowchart tracks the appellate pipeline. Aggrieved participants can appeal to the SAT within 45 days. The tribunal may confirm, modify, or set aside orders. As the final fact-finding body, SAT decisions escalate to the Supreme Court solely on questions of law, not factual disputes. The Securities Appellate Tribunal guarantees that the speed and authority of financial regulators do not override the requirements of due process and constitutional fairness. The current infrastructure relies on statutes written decades ago. To manage the next phase of institutional integration, the legislature introduced the Securities Markets Code Bill in 2025. This table maps the structural shift. The proposed code consolidates 3 fragmented laws into a unified framework. Crucially, it separates powers. Investigators cannot serve as adjudicators. It also establishes an 8-year investigation limitation period and shifts minor technical defaults from criminal offenses to civil penalties. By imposing strict timelines and decriminalizing administrative errors, the SMC 2025 transitions the regulatory landscape from a reactive, punitive posture into a predictable system designed to attract and secure global capital. Returning to our architectural model, the entire mechanism works simultaneously. Market infrastructure institutions filter transactions. SEBI enforces rules. The RBI manipulates economic variables. SAT ensures power remains just. Encapsulated by the Securities Markets Code, they collaborate to aggressively scale India's economy while shielding individual investors. I'm Dr. Mari Muthu. Our goal remains constant: to dissect complex mechanics, establish clear facts, and give you the structural understanding to navigate these systems.